Is gold a commodity or a currency? Before you invest in gold, you should probably change your thinking. If you look up the gold price in any present-day financial reporting news, you will find it listed under commodities. But is this right? Let's look at gold over time. Gold has a rich history as a currency that spans thousands of years across various civilizations. Here are some key points highlighting its historical use. Ancient civilizations. Gold was first used as a form of currency in ancient civilizations such as Egypt, where it was used for trading as early as 3000 BCE. Its rarity and durability made it ideal for this purpose. Even people 5,000 years ago wouldn't go to work, or trade products and services for nothing. Classical era. In ancient Greece and Rome, gold coins were widely circulated. These coins were minted with standardized weights and often bore the insignia of the ruling authority or city-state. Medieval period. During the Middle Ages, gold coins continued to be used as currency across Europe and the Islamic world. The Byzantine Empire, for instance, issued the solidus, a gold coin that remained a stable currency for centuries. Gold standards. In more recent history, the gold standard emerged as a monetary system where the value of a country's currency was directly linked to a specific quantity of gold. This system became prominent in the 19th and early 20th centuries, providing stability to global currencies. So basically, people accepted the equivalent of what a modern-day banknote is today in exchange for their time, goods, and services. The caveat was that it could be traded for a specific quantity of gold. Modern era. The 20th century saw the decline of the gold standard, particularly after the Bretton Woods Agreement of 1944, which established a new monetary system with the US dollar as the world's reserve currency backed by gold. This system eventually ended in 1971 when the United States abandoned the direct convertibility of the dollar to gold, marking the transition to fiat currencies backed by the credibility of governments rather than physical commodities like gold. So wait, all the modern currencies were linked to the United States dollar in 1944, which was exchangeable for certain quantities of gold. The United States then printed up, another word could be counterfeited, too much paper currency, and subsequently defaulted on their gold obligations in the 1970s. Let's think about this. For approximately 5,000 years, people refused to work for nothing. However, for the past 50 or so years, people have willingly accepted payment in what is essentially valueless paper, or digits in an account, that can be continuously printed, counterfeited, by governments around the world. So you go to work and are essentially paid in nothing is one perspective you could take. Gold. Today, despite the shift away from the gold standard, gold continues to be used as a store of value and a hedge against inflation and economic uncertainty. Did you know that central banks, or the people that counterfeit as much currency as they like, have been net buyers of gold since 2010? In the last 14 years, they have globally accumulated approximately 7,800 tons of gold. So the people who know the most about the financial system and modern-day money are accumulating gold. Why? There is only one explanation. They don't have as much confidence in these modern-day currencies that you do. How significant is this in 2024? Very. Central bank foreign reserves are now made up of first place. United States dollar, second place. Gold, third place. Euro. Yet private citizens are not taking notice with retail. Private citizen gold investments in the West are at record lows. In the United States, it's actually half of 1% on average in portfolios. Seems low. Price prediction. So if people lose faith in the current currency system, which is an inevitable phenomenon, noting there is 5,000 years of history to prove it. A return to a gold standard is the most likely outcome which central banks seem to be preparing for. So to back the current levels of fiat currency supply, it's a simple mathematical formula. Using historical examples of gold standards, you come up with a price forecast of somewhere in the region of $28,000 an ounce or 10x its current price. But what's the math? M1 money supply in the United States about 18 trillion. Divided by 261.5 million troy ounces held at the United States Federal Reserve equals about $28,000 per ounce. They won't take the cash out of circulation, they will simply be forced to revalue gold, which has happened before. It's time to change your thinking. Gold is a currency, not a commodity. The investment world has it very wrong. Central banks know it is, and that's why they are buying it and storing it at increasing rates right next to their ever smaller, percentage-wise, stockpiles of dollars, euros, and sterling. If you figure it out before everyone else, there is wealth to be accumulated. Happy investing. Like and subscribe for more content.